All right, no problem. All right, so today was heck of a day, and in today's session we're going to be talking about another one of continuity patterns. For those of you who haven't attended the yesterday's lecture, we're going to be starting. Uh, we're going to be having some recap. So in today's session, I'll just meet everyone. Yes, give me. Yeah, sometimes that happens to me, man. Sometimes that is. Okay, we're good now. All right, so thank you so much, everyone, first of all, for joining us. And in today's session, we're going to be continuing our chart patterns. For those of you who haven't attended the yesterday's lecture, let's just recap. In yesterday's lecture, we were discussing about continuity patterns. What is a continuity pattern? It's a pattern that tells us that the ongoing trend is going to continue. I think it's pretty evident from the name itself, continuity. Oh my God, what's happening? Annotations, continuity, right? So continuity patterns are the patterns which tell us that the ongoing trend, whether a bullish or a bearish trend, is going to continue. So if that pattern forms during a bearish pattern, during a bearish trend, we will know that the bearish trend is going to continue. And if that pattern forms during I mean, this is bullish, right? If that pattern forms during a bearish trend, then we know that this trend is going to continue. So in today's session, we're going to be talking about the bearish rectangle pattern. The bearish rectangle pattern. Bearish. I'm just going to write bearish and rectangle. I'm pretty sure you guys are familiar with. So what is exactly a bearish rectangle pattern? It's really something like this, right? So it's basically the market is dropping consistently and then it consolidates in a sort of a rectangle and then it falls again. And then it consolidates in form of a rectangle and then falls again. That's called a bearish rectangle pattern. So if you are in a bearish trend, first of all, you have to identify the trend, and it's pretty easy to identify a trend. It's just you go into higher time frames and you look at the trend. And obviously, after a drop, it's almost a trend already. So as you can see over here, a big red candle, that means a big drop is going on. That means bearish, right? And then you see the market is consolidating in this rectangle. And if it breaks the support, we will have a bearish continuation. That is basically no rocket science in there. Basically, really simple bearish rectangle pattern. If the market is bearish and you see a rectangle consolidation, do not go long. Do not go long or repeat. Very, very few times it will happen that you will see a fall consolidation and then revert back. Very few times, right? Very few times. For bearish rectangle pattern to be successful, it is compulsory for the pattern to break the support. As you can see over here, let me just clear all the clutter. The price was decreasing, right? And then it started consolidating, right? First of all, it hit this high up, right? And then went back down here. We have now two zones. This is the zone where we know that sellers are really active. This is the zone where we know that buyers are really active since they bought here once and then they bought here again. So we would just draw a line already here, right? Before even whole this is formed, right? We would just already draw a line over here, which we will call the support. For those of you who haven't attended any of our lectures, then support is a line which passes through all the lows, major lows. Lows are the zone where buyers are sitting, where buyers are buying. And why buyers are buying over here? Because they know that buyers are active over here and they are trying to sell over here in this position. So buyers would buy over here and then they just see they're selling here again, they're selling here again. So this is a selling zone, or as we call the resistance. Now, for bearish rectangle pattern to be successful, the price has to consolidate and then break the support. If it breaks the resistance, that could be a possible sign of a reversal, right? That we will study. We've already studied the reversal chart patterns, and yes, we will have repetitions and we will study reversal chart patterns again. We will revise that. So for the price to be able to continue the bearish pattern, for the price to be able to successfully create a bearish rectangle pattern, it has to break the support, and that's basically where our entry will be placed. So our entry will be placed a little below our support, because if the support is broken, we know that the price will continue to fall because it will be a successful bearish pattern. So you can just enter over here if you're a future trader, right? So for those of you who are not familiar with future trading allows you to trade whether short or long positions, whereas spot, you could just buy a coin and then sell it when it's high. And basically that's a much more safer way to trade, but a lot of people do like future trade, so we are here to teach you everything, right? So as you can see with a successful breakout over here, so what's a breakout? Anytime the price breaks a support or resistance, that's called a breakout, right? Breakout. Please forgive my really trash handwriting. I'm really bad with that. So if the breakout happens, then we will have a bearish pattern, right? Nothing special here, nothing rocket science here, just simple concepts, right? So let us discuss a little bit about target and stop losses. So the target we are expecting after a bearish rectangle pattern formation is at least the least target we are expecting is the distance between the support and the resistance. That's the least target we are expecting. Let's say the price over here is $100 and the price over here at the support is $90. So the difference is $10, right? So we're expecting a drop of at least $10. That means the price over here would be $80, right? Now, the drop would obviously be larger, right? Because it's a bearish trend, but that's the least. That's our first TP. After that, we will just continue to scalp with a stop loss in profit, and we will try to get all of it, right? Just use trailing stop loss, and trailing stop loss will update your stop loss as you move further towards your trade, towards your direction, and make sure you bag the majority of the profits, right? So let's just remove all of this and go on to our next slides. Our next slide is today's BTC pattern. So in today's BTC signal, we told you today's BTC target of 94 something, 94 200, right? Now, where did that come from? And why is that slide over here? First of all, because the slide was important over here because we had a bearish rectangle pattern formation over here, and not only, and I'm not gonna say that that was the only reason why we predicted the dump, right? Why we told you about the dump, but that's one of the reasons, right? So to my students, I always tell you, there's gonna be so many parameters that influence the market, and we have to combine them all to be able to perfectly analyze the market. And even still, sometimes the market manipulates and we might not be very much getting the results we expected, but by knowing all of these things, your accuracy goes all the way up to plus 70%, which is more than enough. A 70% win rate in crypto trading is more than enough, a 70% plus, right? And if you just like keep on mastering it would jump up to 80%, 90%, and then all the way up to 95%. It is achievable. That's no dream, right? So as you can see over here, the price was previously, if you open up high time frames, the price was in the downward. It was in the bearish trend, right? As you can see, the price was falling over here, and then it started to like consolidate in this rectangle formation. And even though the price was already falling, right? So this alone is not the fall, right? So as you can see, the price is consolidating, and as soon as it broke out the support, we had a massive fall, and the target given was 94 200, and BTC dumped all the way up to 93 800 something, right? Not really far from our target, right? So exactly after hitting our target, BTC reversed and started to climb, right? So our target was successfully achieved, and exactly after that, BTC started to reverse. So how that target was fixed, uh, it really just didn't involve the chart pattern. I'm again and again saying to you, it involved many indicators, many trading strategies, liquidity, and many, many other factors, which we will be discussing, which we will be learning along the course. But for you to be able to 100% fully get customized, get accustomed, and get fully in power of all these parameters, you have to first specialize in the basic parameters, in the basic learning levels, which are the chart patterns. First you master chart patterns, then you will master the indicators, then you will master our strategies, and only then you will be able to combine all of them and use in trading. So we've already discussed a second of our today's this week's chart pattern, continuation chart pattern. That is the bearish rectangle chart pattern. Let's just now go and see what's happening in the actual BTC currently. Let me just minimize real quickly. Am I audible to you guys? I don't really hear a lot from.
Yes, yes, you are.
All right, all right. So Tina is saying, "Hi, can you volume in more microphone?" Tina, am I visible? Am I audible to you now? Maybe the volume is a little less. Maybe. Ethereum is also consolidating after last fall. It's near the support and resistance. Wouldn't it fall again? Yeah, we will analyze it. No worry, Ahmed. We're gonna analyze that. Don't worry. Right, let's just go back to our trading view. Now, right. So over here we have the trading view. Perfect. All right. So this is BTC 15 minutes time frame. As you can see, if I zoom out, we are clearly in the downward trend. We are clearly. So over here, I was just in the previous picture, I was showing you this portion, whereas in fact that is not only the where the chart pattern was forming. Basically, it was forming over here when there was like a big fall, and then this curve is formation. That is not basically a bearish rectangle pattern. That is a cup handle formation, which I will be teaching you in the upcoming days, and it is a really, really strong bearish sign. So that alone was a very, very strong bearish sign. As you can see, there's like a clear uh, demand zone over here. For those of you who already studied demand zone with us, they will know. And for those of you who haven't, don't worry, we will really, really discuss it again in the upcoming lectures, and you've already been provided with recorded ones. And yes, we will be having repetitions. So as you can see, as soon as this support was broken, we had another low, really, really low, and then the price is now recovering, still consolidating around this area. So this is basically what happens when you're in a uh, bearish sentiment. Uh, Now let's just go on to some higher time frames and see if we can spot what the trend is going on. Now, I am going to teach you in the upcoming lectures how to spot a trend with the help of an indicator. But we don't really need to always rely on the indicators, although indicators work really well. And I'm going to teach you how to use those indicators to be able to very accurately visualize how to spot a trend in the real time. But we can just see it by naked eye, by just a very human analysis. Now, as you can see over here, the price we've already now let's just discuss why these lines are here for. So in this 1 day time frame, we are seeing that the price is very firmly increasing all the way up till here, right? Over here we had a break of structure. Now what's a break of structure? Now whenever the price is in an upward or downward trend, there's something called higher highs and higher lows. Every next high is higher than the previous high, and every low is also higher than the previous low. It is only when some high is not really higher than the previous high and some low is actually lower than the previous low. That is basically a break of structure. Some kind of break of structure was seen here. So that's why these lines are here for, and we're gonna really, really dive into it why they're here for, and we have already discussed it multiple times. Now, as you can see, the price is rejected from here, and then it fall all the way over here, right? Now, this became a very important demand zone, right? We now, all the crypto investors around the world know now that at this area, buyers are sitting. So they would just draw a line over here, and then they would just buy at this zone. And then they have noticed that at this area, sellers are active, right? So they would just buy at this zone, sell at this zone. See, again coming back. buy at this zone, sell at this zone, buy at this zone, sell at this zone, buy at this zone, sell at this zone. So see, they were doing it again and again, and then again happened. They sold over here, they keep on selling, and it's again really close to our buying zone, our our demand zone. Demand zone, buy zone is basically the same thing, and selling zone and what's the other name? I forgot. A selling zone. Let's just call it selling zone for the ease of us. So as you can see, the price is already coming back from our selling zone. So we were expecting, and we should expect the price to first drop all the way out to our demand zone, to our buying zone, because there's where the buyers are sitting. The buyers are not going to buy over here. They know that the price could go anywhere from here. It could go up or down, doesn't matter, right? They are waiting for the price to hit the buying zone, and over here, once it hits the buying zone, we're going to be seeing many green candles. So just by looking at the buying and demands, buying and selling zones, you can have a bias. You can come up with the sentiment of the market, like what's the market is going to do in the upcoming days in today's sessions, right? All right. So if you were entering long positions in this zone, then that's not really a wise decision, and we ourselves have been shorting a lot in this zone because it's clearly coming back from this selling zone, and the buyers are not going to be interested unless the buying zone is approached. So maximum people are just going to be profit taking, just going to be selling their commodities and just pushing the price all the way back to the buying zone. And not again, I'm not saying that that was the only way, that was the only uh, that was the only logic behind today's dump, about behind today's prediction. That's one of it. I'm going to be teaching you each and every one of them till you know each and every one of them, and you have perfected each one of them, so you can now use all of them combined. So that's a little something about continuation pattern, and let's just revise it real quick, and then we're going to end our session. And tomorrow you have to practice it again. You have to find setups, you have to find where this has been happening. And Ahmed was asking about Ethereum, so why not just first look at Ethereum. Now we did discuss the bullish rectangle pattern, and as you can see, BTC throughout the years, BTC has just been showing us so many bullish rectangle patterns. And look at this. This one is a very beautiful bullish rectangle pattern, and for so many years BTC was stuck here. Oh my god, what's happening to my mouse? All right, so BTC was stuck here in this rectangle, and as soon as the breakout happens, we were at a new all-time high. And as you can see, BTC is right now currently also stuck in a bullish rectangle pattern, and unless this line is broken down, there's not going to be a reversal, and we are expecting a new higher high. If this selling zone is broken, if there's a breakout, and then we will see a 150 really quickly, really soon. So that's a little something, and let us just now go to our friend's request of Ethereum, and let's just see what we can get on Ethereum. All right, now this is Ethereum. Now Ethereum, by looking at a one-day time chart, now one-day pattern, we are seeing that Ethereum has been consolidating a lot, right? Ethereum has been consolidating, really not going anywhere, and then it started rising and came up to this peak, right? Now, this peak was important because it was first rising and then it stopped and get rejected from this peak. That means sellers are sitting here, right? So any trader who was present at this time, he now knows that sellers are sitting here, right? But that trader, if he's a smart trader, he would wait for the price to come back down and get rejected from some zone. So the price comes down at this zone and gets rejected and then goes back again to the same zone. So now we know that the price is consolidating like this, right? Too dirty. Let's just use green. I love green. So now we can easily draw support and resistance here. This is the support. I think we should use the lines. Yeah. I don't know what's with this. Look at that. Look at that. Anomalous. All right. And let us just draw the resistance to, I don't know. Sometimes this trading view glitches a lot. All right. So there's clearly now why did I draw these lines? I think it's pretty easy to say that the price is getting rejected again and again from this zone. That's a huge selling zone over here, which we call I forgot the name, demand supply zone. Yes, supply zone. And the prices increased once from here with sharp green candles, has done it again over here. So that's a very, very good demand zone. So if the price comes back again here, we would easily expect it to go all the way back up here. So either you can just buy over here because price can go up from here, because demand zones and these zones are not basically just a line, it's a zone. So the price can go up from anywhere from here, right? It not really has to come up to a specific point. And same again with the supply zone, with the selling zone, it's really a zone, not just a specific price value, right? So these lines do help, but 1-2% of variability is always accepted and eligible. So either you can buy over here Ethereum, as we've already given you the signal, or you could just wait for here, or you can just buy here and then DCA over here, buy more Ethereum over here, and then wait for this scoop up. Now, only if there's a breakout in over here in this direction, then it could be a problem. But seeing that it's already in the upward trend, and then some Ethereum getting burnt, and not really any disastrous news for Ethereum, and Ethereum not being able to go as high as all the other alts have performed, we're expecting Ethereum to go up, right? And to have a breakout. And once we have a breakout, we will see a 6,000, we will see an 8,000, and a final $12,000. That's going to be once the breakout happens, right? So that's a little something for Ethereum. That's why we've been accumulating some Ethereum, and hopefully we don't go bankrupt and we end up with good profit, unless the owner decides to do some random sell off or some random stuff which causes the price to fall off, which is really unpredictable because it really depends on the mood of the owner. Just like come up with some random stuff which like destroys the whole project. That's like, yeah. So Ahmed is saying that magnet is selected, uncheck that and it won't happen. Thank you so much. It's like I don't know what it is, but thank you so much, Ahmed. It was really a pain in the mind. What percent port you recommend for a single long or short trade, including DCA? Well, I've already mentioned that in the rules of the group, in the bio of the group, it should not be more than 10% or 5%. 5 to 10% has to be it, because I'm not saying it because we're scared to do it. It's because there's some logic behind it. Once you have like once you have like $10,000 in your account, right? And you're spending 5 or 10% of it, right? That is 5% of it is $500, and 10% of it is $1,000, right? Now, once you do that, right, your liquidation is going to be very far off, right? Very easy to manage. But if let's say you have $1,000 and you're going in with $500, your liquidation is going to be crazy close. You won't be able to hold the trade if it starts to go into loss for the moment, because uh, we we do have targets, but sometimes the trade goes into loss for a while and then recovers, right? So for you to be able to recover it, for you to be able to recover it, for you to be able to hold it, you need to manage your liquidation. And up until that is not done, you're going to be at a risk of loss. So 5 to 10%, my friend, each and every one of that trade. Should DCA be 101 or 1-2 of the original AP? We do really call DCAs into the group, right? Up until then, you don't really have to do DCA, because that's based on multiple factors, and we are actually monitoring the trade. Now, when we give you the trade, right, we are actually monitoring the trade the whole time, right? So we give you DCA, we tell you if you have to close it, if you have to hold it, right? So up until we don't say we don't close it, we don't close it, right? You just hold on it. And if you have any query, just DM us, be like, should I hold it? Should I not hold it? Is my liquidation okay? Is anything? You can just like discuss it with us. But like, you don't really have to, because the rules are really, really simple. Once you have 5 to 10% of portfolio, invested. You don't really have to worry about it. Just let it run until we say otherwise. And if some some bad day, some really bad day, and the price really goes against our expectations and really continues to do that, then we'll just close one or two trades and loss, which haven't happened yet. But on it's in the worst case scenario, right? Well, it's worst case scenario. So let's say you're having 5, 10 good trades, one trade loss, just close that trade and then just like move on. uh 10 out of 9 good trades, 10 out of 9 wins is more than enough. And Javanica is saying, please uh send the recording. Yes, the recording is going to be sent. And can we arrange one class to read the volume in real time to just the direction? Obviously, we're going to be having discussions on volume, many other indicators, trading strategies, and so many much more. We can't really just do in one class. We have to move systematically. We have to first finish our chart patterns. We have to study the candles. We have to study uh, and yes, many indicators, including the volume. We have to study some trading strategies. What are some time zones? Sometimes the time zones are helpful, sometimes the liquidity is helpful, sometimes many other things are helpful. We're going to be discussing that in the upcoming lectures. So there's a reason why this course is a lot long than just like 1, 2 lectures, because we're going to be covering each and everything systematically. After every topic which is covered, you're given 1 day off. Practice it, create some assignments, create some projects, and create some setups, right? Find some setups of that one particular thing that's been taught to you. And in the best case scenario, use that one particular thing to create your own trades, to come up with a trade and see if it goes your direction. Like, do it in real time, right? And if it doesn't, learn from it. If it does, good for you. So thank you so much everyone for joining us. I would really appreciate, and I would really love if you guys practice what I teach you today, because so many less of you actually practice and so many of you just listen to it. Because until unless you practice, right, and until unless you don't practice, whatever I'm teaching you today is just gonna fly off your head like watermelon. Like, think about watermelon, okay? You think tomorrow you're gonna remember the watermelon? No, because it's watermelon. Nobody remembers watermelon. So if you don't want this learning to be watermelon, practice it. Practice it 2, 3 times. Practice it 10 times. Create setups. Do it in lifetime, right? And try to find live setups out of it. See if this is working for you. Once you do that, you're never gonna forget it, and you will be able to integrate it once I've teach you other things. Because when I will teach you all the parameters, right? You're gonna be like, oh my God, there's so many things to analyze, and sometimes they conflict each other. The volume is saying something else, the pattern is saying something else. How do we do it? It's so confusing, it's so complicated. How do we do it? That is when those who have practiced good, they're gonna take the lead, because they now know how to integrate well, because they are now the master of the basics. And I know chart patterns are kind of boring, but they do work. And so many people are making boatloads of money. So once you integrate it with the other parameters, which I'm going to be teaching you, it's going to turn into gold. So thank you so much everyone for joining us. I want you guys to practice really good. There's one chat. They will confirm later what is the next move of BTC. That will be sent into the group once confirmed, because BTC is right now currently at our target. So we have to have some significant evidence of reversal, and then we will go for a reversal trade. And if you just look at the 1 day time frame, we now know that BTC is going towards our buying zone, so most likely it's going to be bearish. And Joannika is saying, I've tried few and posted in group. Perfect, Joannika. That is double nice of you. But I want you all to be participating, just not Joannika and just not Tina is doing a really good job. Yes, I did get a chance to see it. I saw them trades, yeah, that you've been sending, and a lot of other guys that you've been sending, and you're doing a pretty good job. And it's really, uh, I'm really pleased when I see you guys actually working on what I'm teaching you, or rather than just like listening to it. Because listening is passive learning. You're gonna forget it. You're gonna forget it, and you won't have the practice. And by the time you reach the end of the course, you will feel like you know a lot of things, but things are really blurry, and it really don't help. Once you sit at a trading view, you don't really know what to use, which strategy you have to use, which pattern you have to use, or which indicator you have to use. It's really blurry, it's really confusing, it's really mixed up. That's the kind of feelings you're going to be having if you're not going to be practicing, and then you're going to be like, oh my god, the course was okay, it really didn't help that much, and then it's crypto is a lot confusing. I think nobody can really predict it. So yeah, so if you don't want to be one of those guys who end up saying that, then please practice it as much as you can. And thank you so much everyone for joining us. Any questions, I'm here to entertain. We need one session on TradingView too, please. Yes, we will have a session. We've already done it, and I'm going to send you the lecture of the recorded one, and we're going to be having repetitions again too. We're going to be having repetitions on how to use TradingView. That's going to be one of the basic ones lecture, and we will be having repetitions of that, Veronica. Don't worry. Thank you. Thank you so much, everyone, for joining us. That was perfectly nice of you to join us, and it was perfect interaction and perfect energy from you guys. Love that. And please keep it up. Please keep up the good work. Please keep up the practice and whatever you've been doing so far. Please keep it up. I love the energy from you all, and when I see you guys working in the group, it makes me really happy. And I want nothing from you guys to be just become the best traders in the world and just like it will be an achievement for me that my students are doing really great. Thank you so much for everyone for joining us. Have a very nice day. I will see you in the next class, and this recording will be sent into the group along with yesterday's recording, so you don't have to worry about it. Thank you so much. Have a very nice day. God bless you all.